Imagine two investors. Both have exactly $750,000 in the market. The first one collects $60,000 a year in dividends. The second collects just $26,000. Most people look at those numbers and assume the first investor is winning. It feels obvious. Who wouldn't want the bigger check right now? But 15 years later, something strange happens. The second investor is actually much wealthier. They're earning far more income, and their account is twice as big. How does less money today turn into more wealth tomorrow? It sounds almost backwards. Less income, more wealth, more freedom, 15 years down the road. But once you see why, you'll never look at a dividend yield the same way again. Because one of the biggest mistakes we make is confusing cash flow with true financial freedom. We focus so hard on the size of the check that we completely miss a trap hiding in plain sight. There's a problem most dividend investors never see coming, and it starts the moment you try to make your investments cover your life today. The goal isn't extracting the most money possible. The goal is making sure the money never stops coming. Here's the one question this entire video is built around. How do you enjoy your money right now without quietly sabotaging your future? Everything that follows comes back to that single question. You've spent years doing exactly what you were supposed to do. Saving, investing, reinvesting every dividend without touching a cent. And now, quietly, a different question has started showing up in your head. When do I actually get to enjoy this? It's a fair question. You didn't sign up for a lifetime of delayed gratification with no finish line in sight. Let's be completely honest with each other. You open your investment account after a long week of work. You see your balance, but you feel absolutely nothing. It just looks like a static number on a screen. It doesn't help you buy groceries this afternoon. It doesn't pay for the electric bill on Tuesday. That's why dividend income feels like magic. It makes your money feel real. Suddenly, that portfolio isn't just an abstract math problem. It's a tool that covers your life. You start doing the math in your head. If I can just get to $500 a month, my grocery bill is covered. If I hit $2,000 a month, I can drop to 4 days a week at my job. Maybe it's the mortgage payment that's kept you up at night for years. Maybe it's the quiet hope that you could retire 2 or 3 years earlier than your parents ever did. But here's the truth we rarely admit. No one actually dreams about a dividend yield. They dream about what that income allows them to do. You don't want the cash. You want the option to say no to things you hate. This desire for freedom drives us toward a dangerous trap. Let's call it the yield mirage. Meet Walter, 63 years old, 2 years from retirement, and tired of feeling like he's behind. He finds a fund paying 10% a year in dividends. His neighbor's fund only pays 3.5%. Walter doesn't think twice. He moves almost his entire portfolio into the high-yield fund that same week. His brain locks onto the bigger number instantly. 10% feels like it could get him out of a daily grind 3 times faster than 3.5% ever could. But look at it this way instead. Imagine 2 job offers. The first job pays you $100,000 a year, but the company is struggling and will likely disappear in 2 years. The second job pays $70,000, but it's stable and gives you a raise every single year. Which one actually protects your future? 2 years from now, the first job doesn't exist anymore. The second job just handed you your 3rd raise in a row. Yield tells you exactly how much cash you receive today. It tells you absolutely nothing about the quality of that cash tomorrow. And Walter is about to find that out the hard way. 5 years have passed. Walter is collecting his 10% check faithfully every quarter, just like he planned. But something's off. The fund's share price has quietly dropped by 40% over those 5 years. His dividend checks are roughly the same size in dollars, but groceries cost more now. Healthcare costs more. His property tax bill is bigger every single year. He starts doing math at night that he never used to do. Subtracting, recalculating, wondering if next quarter's check will stretch quite as far as this one did. He starts quietly looking at part-time work again, something he swore he'd never do once he retired. If this keeps going another 10 years, the math doesn't get better. It gets worse. This is the centerpiece of the problem. Income without growth is completely fragile. The world gets more expensive every single day. Think about healthcare, housing, and food. If your investment pays you a fixed cash amount but the share price never grows, you're actually losing ground every single year. Walter is walking up a downward escalator, and he doesn't even realize it yet. A portfolio that pays you today but can't grow tomorrow isn't actually helping you. It's just putting a bandage on a deeper problem. Try to extract every single dollar the moment it's earned, and eventually the engine that's supposed to support your entire future starts to stall out. And the worst part is, nothing dramatic happens. No crash, no headline. Just a slow, quiet erosion that's almost impossible to notice from the inside. Most mainstream financial gurus tell you that the ultimate goal is to build the biggest pile of cash possible to extract the highest income. They're wrong. Ask yourself honestly, when you imagine financial freedom, are you imagining a number, or are you imagining a feeling? Most people picture a number. The number is the wrong target. Most investors are asking the wrong question entirely. They're asking how to take out as much as possible. The better question is how to keep the system running long after they stopped working. This is where we need a radical shift in perspective. Your portfolio's job isn't to act like a personal ATM that you drain every weekend. Its job is to support your lifestyle without destroying itself in the process. To do that, we have to stop thinking of our wealth as a machine and start looking at it as a living system. A machine breaks down the harder you push it. A living system, treated well, grows stronger the longer you leave it alone. Think of a successful portfolio like a fruit orchard. If you plant a single apple tree and eat every single piece of fruit it produces from day one, you stay fed for the week, but you still only have one tree. Now imagine a different choice. You eat half of the fruit, but you take the seeds from the other half and plant them back into the dirt. We call this the grueling phase. For the first 2 or 3 years, this feels incredibly boring. You have less food on your plate today than the person who ate everything. But soon you cross into what we call the momentum phase. Those new seeds grow. 1 tree becomes 5. 5 trees become an entire orchard, almost without you noticing the shift happen. That's not luck. That's just what happens when you give compounding enough time to actually work. The wealthiest investors don't maximize what they take out of the market today. They maximize sustainability. They build a financial ecosystem where the growth feeds the income, and the income funds more growth. Walter eventually figured this out, just a little later than he would have liked. He rebuilt about half his portfolio around companies with smaller, growing dividends instead of the biggest possible check. His income today is lower than it was at the peak of his old strategy, but it's growing every single year, and so is the portfolio underneath it. For the first time since he retired, he isn't doing anxious math every time the grocery bill goes up. This brings us to a major realization that destroys the false choice between saving for later or living for now. Your wallet doesn't care where a dollar comes from. Financial freedom doesn't care whether that dollar came from a dividend check or from the stock price going up. When you focus only on dividends, you block out half of the picture. True wealth comes from total return, which is your dividend plus your growth. There's a third piece nobody talks about too: flexibility. A portfolio built on total return gives you options a high-yield only portfolio never can. You can sell a few shares in a strong year. You can let dividends reinvest in a year you don't need the cash. You can adjust as your life actually changes, instead of being locked into whatever the yield happens to be. By picking investments that grow their payouts over time, even if the starting amount feels small, you ensure your income safely outpaces the rising cost of the world. You get to enjoy your life today because you know the orchard is planting its own seeds for tomorrow. We often look at financial freedom as a massive, distant event. We think it means quitting our jobs entirely, buying an island, or hitting a specific millions of dollars milestone. But freedom rarely arrives all at once. It arrives expense by expense. The moment your baseline portfolio pays for your internet bill, you're a little bit more free. When it covers your groceries, a weight leaves your shoulders. When it covers your housing, you own your time. Remember that mortgage payment from the beginning of this video? The one that used to keep you up at night? Picture the exact day your portfolio covers it completely. Not your paycheck, not over time. Just the orchard, quietly doing its job. Picture the actual moment. You're at your desk on a Tuesday afternoon, and your manager asks if you can pick up an extra shift this weekend. 3 years ago, you'd have said yes immediately because you needed the money. Now you pause, you actually consider it, and you realize you can say no. That pause is the whole point. That's what all of this was for. You don't need to choose between living well now or protecting your future self. You just need to stop chasing the highest short-term payout. Shift your identity from an income chaser to a freedom builder. Stop trying to milk the cow dry today and focus on building a system that grows stronger every single year. Because the real goal was never maximizing your income. The real goal was always maximizing your freedom. Walter figured that out 2 years later than he wanted to. You get to figure it out right now.